Welcome to Geojit Spotlight. The Union Budget will be presented on February 1st. Geojit Chief Investment Strategist Dr.V.K Vijayakumar joins us to share his views on the budget. Welcome, sir.
Thank you, Abhilash.
So the budget proposes mainly depend on the performance of the economy. How is the Indian economy doing now?
The Indian economy has been going through a very challenging situation during the last 3 years. Not just the Indian economy, the global economy has been going through a very tough patch. First, we had the COVID shock of 2020, and this COVID shock resulted in India's GDP contracting by 6.6%. Then in 2022, early 2022, we had the Ukraine war. The Ukraine war pushed up commodity prices, the prices of crude and natural gas, all commodities including metals, food grains, edible oil. The prices of these commodities went up and impacted all economies. And thirdly, in 2022, last year, we had one of the worst hawkish monetary policy in the US. Very savage monetary tightening by the American Central Bank Fed. They raised interest rates 7 times by a total of 4.25% in 2022. This resulted in appreciation in dollar and depreciation of almost all other currencies of the world. Indian currency, Indian rupee, depreciated by 11% in 2022. So these 3 shocks impacted the Indian economy. But then fortunately, we have weathered this storm very strongly. Indian economy is now the fastest growing large economy in the world. This year, financial year 23, we are likely to achieve a GDP growth rate of around 7%. This is much higher than the growth rate in any other large economy. But the coming year also, financial year 2024, again, India will be the fastest growing large economy in the world. Our banking system is in the pink of health. Tax revenues are much higher than what the finance minister had budgeted in last year's budget. So relatively, we are in a very strong position now.
So what are the likely proposals? Will the budget be populist, particularly since this is the last full budget before the general elections of 2024? Also, 9 states are going to the polls this year.
It's very difficult to anticipate what the finance minister will propose in the budget. One proposal which can be predicted with a reasonable amount of accuracy is that there will be an increased allocation for capital expenditure. That has been the trend during the last several budgets. This year also, there will be an increased allocation for capital expenditure because economic growth momentum in the economy has to be sustained, and that requires that the government should continue to invest money in infrastructure expenditure, in sort of a stimulus to the economy and also for increasing our infrastructure capabilities. So that will certainly be there. By the way, this will be beneficial for construction companies, capital good companies, and cement companies. Investors should keep this point in mind. Then your point about this being the last full budget before the general elections in 2024, and the fact that 9 states are going to the polls in the next 1 year, that is very important. The German statesman Bismarck famously said that politics is the art of the possible. Therefore, naturally, when the situation is favorable, the authorities, the political masters, can be expected to make some proposals which are a little bit populist, which are generally people-friendly in the form of tax concessions, for instance. That can be expected in the budget. One likely proposal regarding direct tax is some relief in the direct tax regime without exemptions. Presently, we have 2 personal income tax regime. One is a personal income tax regime with exemptions like ATCC benefit for example. And there is another income tax regime without any exemptions. The government's objective is to promote this income tax regime without exemptions. But then this regime has not taken off in a way the government expected it to take off. Therefore, we can expect some raising of the basic exemption. Basic exemption of 2.5 lakhs was it was decided in 2014. It was fixed in 2014. High time it was revised. So we can expect revision of the basic exemption and also some tweaking of the income tax rates in this no exemption income tax regime. That is one proposal which can be expected. And then there can be other measures also, like assistance to MSMEs, etc. I am speaking mainly from the stock market perspective.
From the stock market perspective, what are the market expectations?
The market doesn't have high expectations from the budget this year. Market is not demanding any tax concessions, for instance. Of course, the market experts will be looking at the fiscal deficit figure. Fiscal deficit this year will be last year's budget target was 6.4% for FY23. That can be easily achieved because of the tax buoyancy that we are having this year. And the target for next year is likely to be 5.9%. If it is 5.9%, the market will be happy about that. If it is more than that, the market will be a little bit unhappy. But then that is not going to be a major factor because fiscal consolidation is happening. But there is one proposal which might happen, which the market is keenly looking for, and that is the reform of the capital gains tax regime. Presently, the capital gains tax system is highly complex. We have different tax rates for different assets like equity, mutual funds, debt funds, real estate. The tax rates are different. The holding period to qualify as a long-term capital gain, that holding period also is different. For instance, in equity, it is 1 year. Above 1 year, it is long-term capital gains. For debt funds, it is 3 years. And then you have 20% indexation benefit. So it is different for different asset classes like equity, debt funds, real estate. So it is high time this complex system is simplified. So we can expect some reform there. Now, it can be positive or negative. One concern in the market is that there are rumors going around that the government may raise the long-term capital gain tax on equity and the equity mutual funds from the present 10% to 20%. If that happens, market will not be happy about it. There can be a negative reaction to that. But if the government raises the long-term capital gains holding period from 1 year to 2 years, market will take it in the stride. That will not be a negative. That is one important factor that stock market investors are looking for in the budget. One concluding remark, particularly with reference to the elections and the possibility of populist proposals in the budget that you talked about. There is a general feeling that good politics is bad economics. I don't think personally that the government will not embark on highly populist programs. The reason is another significant characteristic of this time is that this is the time when India has assumed presidency of G20. And G20 aims at sustained growth and sustained prosperity for all. And therefore, the president of G20 should be sending out a message of sound economics. Therefore, personally, I don't think that politics will trump economics in this budget.
Thank you, sir. Thank you very much.
Thank you.